Hey everybody, so how do you buy your very first rental property? It says do not disturb tenants. And so understanding some of the process, both from a listing agent perspective as well as a new investor out there that's looking to possibly get into the rental property game, I just wanted to address the pros and cons and the plan of attack to buy and sell or purchase your very first investment property. Now, let's just go into the pros and cons first to just start out. Let's start with the bad news first. I always like that. The bad news is if you're going to self-manage, aka not hire a property manager, you're going to get phone calls. The other day, I was getting a phone call. I cooked this beautiful turkey dinner with my parents. They were in town. I was just about to sit down. Literally, I think there was 5 minutes left on the timer. And I got a phone call that there was no water at one of my investment properties. I was out there till midnight, guys. So things happen, right? But would you give up some of that freedom of not having people call you and some of those headaches to build equity and wealth, $50,000, $100,000, $150,000, $200,000, right? You got to put that into the equation. So being available and managing your own properties is a con, right? Until you're at the point in which you can hand those off. Maybe you are at the point and you just want minimal cash flow and you want to play appreciation game. But the number one con of owning investment properties when it's your very first is that you're going to become a property manager. Number two con is you're going to have to keep up to date with rental laws, how to be a landlord, how to write leases, how to put deposits into a trust account. You're going to have to spend some time to understand how to manage that asset from a tenant perspective, okay? That includes eviction notices. That includes any type of notice that you may need to send, as well as the application process and the advertising of that rental property if you do not outsource the property management. Third con, you're going to need a bookkeeper or accountant that's going to have to be able to fill out additional forms when it's tax season. You're going to have to understand depreciation. You're going to have to understand what a Schedule E is. You're going to have to understand write-offs associated with that rental, as well as cost accounting, so that you can track what type of profit and loss is happening on that specific property. Bookkeepers, accountants, they cost money. There's extra preparation that's involved. The fourth con that you're going to need to understand is that owning a rental property includes having to make some upgrades. I'm not talking about emergencies or tenant calls about small repairs. I'm talking about upgrades that you need to do over time, including allocating for new roofs, siding, windows, HVAC, foundation work if necessary, any type of appliance that goes out. So you need to understand that there's going to be some expenditures that are not emergencies but are long-term deferred maintenance that you're going to have to address. That's going to attract a better clientele. They're going to like that you have things that work in your rental properties, and therefore it can be a pro and a con. Number 5 con of owning your very first investment property is understanding that you're not going to be able to get into it with just minimal money. You're going to have to understand loan to value. You're going to have to understand how commercial loans work, as well as commercial appraisals. And what I mean by that is anywhere between 10% down to all the way up towards 30% down there's going to be more skin in the game, more liquid capital that's going to need to be allocated if you're not paying in full cash. If you're paying in full cash, then you're going to drop a lot of money. And then you're going to have to understand gross rent multipliers and when that break-even point is going to happen in terms of how much you paid for the property versus when will the actual net profit pay you back 100% of all the money you paid to purchase that property, all cash, right? So money is number 5. Number 1 pro of owning a rental property, wealth building. Upswings in appreciation mean upswings in equity. They mean that you have built yourself a savings account that is growing rapidly in context and in fluctuation of the market. So building wealth, number one. Number two is tax advantages. Being able to depreciate properties, being able to take write-offs, being able to understand from a tax perspective how rental properties work in your favor. I'm not an expert in this, so contact somebody. Number three pro of owning rental properties, the ability to leverage and purchase additional rental properties from your equity gain or position in those properties in order to use either cash out refinance or 1031 exchanges or any other type of leveraging game in order to acquire more doors in any type of speed of velocity. Number four pro of owning rental properties is always having some place to go if you need some place to live. And I say this because a lot of people don't understand this. If you have a daughter or son and maybe they went to college and now they're going to move back, but you don't want them to live with you, right? Usually in most states' laws, your immediate family, if they would like to move into one of your rental properties, is a benefit of owning a rental property is that the eviction process is typically 30 days, not 60 or 90 days in other states. So it gives you more living options, right? Maybe it's a vacation property that you do Airbnb. Maybe it's a rental property in a different state that you eventually want to move into, right? There's that living situation in which you own that property. So with the right legal notice and subject to tenants' rights, you have the ability to position yourself into that property if need be or if you want. Number five pro to owning rental properties, in my eyes, is the experience, the education it provides, and the value you're giving back to the community. A lot of people don't talk about this. You'll talk about a lot of investors in here talking about cash money, cash flow, which is number six. But what they don't talk about is how their rental properties make them better people. How those rental properties provide affordable housing to people in the community, right? You being a housing provider not only gains you experience on how things operate, how taxes work, right? How rental laws work, but it's a springboard to more rental properties. It provides you I don't want to say a leverage point, right? I want to say a learning experience. It's the education, the hard knocks of how to operate those properties, how to make them profitable, and then it gives you the experience to be able to acquire bigger assets, right? If you never did something and then you tried to go bigger and better every single time, you're going to run into mistakes. So let the problems and the repairs and the headaches equate into a bigger net gain over the long term. You got to think long term, guys. And I know I did 5 cons on the other side, but I want to say number 6. These are not in any order based upon importance, but just in order in general. Number 6 is cash flow. Now, cash flow is that net gain. There's 2 ways to look at cash flow. There's cash flow before debt service, which means how much money you're making off that rental before you pay your mortgage payment, or you can look at cash flow like I do, which is kind of what is my cash flow after I pay my debt service and after I pay my taxes. What is my true net money in the bank, mailbox money every month, right? That's the number 6 reason why you own rental properties, right? And I know there's some other things that I talked about today that a lot of people don't understand, but I think of all the pros and cons, one of the most important is that you don't have a passion for it, you're not willing to educate yourself, and you're not willing to take care of people. You shouldn't be in the rental property business, guys. If it's all about money and it's not about providing affordable housing or taking care of people, you're going to have the wrong mindset going into it, and therefore you're going to always be looking at only the money in it. And I think sometimes that's what loses the major focus of long-term growth, right? There's a fine balance between profit and productivity and also compassion and being able to provide. And I think that more people need to operate in that sequence, and that's ultimately going to make you a better place. And karma always will come to fruition. But today, In phase 2 of this video, I want to talk about buying your very first investment property and understanding some key components. I did a seminar about this on one of my other YouTube channels or other YouTube playlists, which you can check on this. Scroll down. It's how to buy your very first investment property. But I wanted to put a summarized version very quickly to make this video less than 15 minutes. Buying your very first investment property, and when you have the cash available or you have the financeability to get a loan, I want you to understand one thing and one thing only. You need to understand the numbers first. Don't go out and buy something unless you understand numbers first. There's some key components that I want you to understand. I want you to understand cash on cash return. Google it. I'm not going to explain it. We can talk about it forever. Also, number 2, I want you to understand gross rent multiplier, which we've talked about in other videos. Number 3, I want you to understand capitalization rate and what that means in terms of what percentage investors are buying that cash flow in that market. Number 4, I want you to understand cash flow before debt service. Number 5, I want you to understand net operating income, gross operating income, and I want you to understand everything that is in an annual property operating data report, an APOD, okay? Things like vacancy, property management, capital expenditures, the list goes on. I want you to understand this. Owning investment property is becoming a master of spreadsheet, understanding general accounting principles and understanding how you're going to operate that property. Not just buying something, throwing money at it, doing some fixes here and there. I see so many investors, guys, that buy properties, don't keep track of receipts, don't follow up with tenants, don't raise rents, and when the time comes to sell, which is right now, they're in a bad situation. The value of that property isn't in alignment to the market. They have to evict tenants. They got to deal with tons of deferred maintenance or wreck and wear and tear to the property that they weren't expecting, and they're upside down on a rental property. So first thing you need to understand is the numbers, okay? How to calculate those things. Educate yourself. There's a few books that you should read. Won't go in, or I won't plug anybody specifically. Next, what I want you to understand is the location and the market rent. I want you to look on Craigslist, Zillow, apartments.com. What does a 1-bedroom, 2-bedroom, 3-bedroom go for? What does a single family house go for? What are rental rates doing? I need you to do a little bit of research and understanding what your market is yielding in terms of monthly rental rates, okay? If you don't understand those, how are you gonna know how to set the rent rate and how to work through those processes? Next, I want you to understand utility costs. Are you going to pay water and sewer? Are you going to put all utilities on your tenant, and how that justifies and works with the market rate and what you're going to charge for your rental properties, okay? Third thing I want you to look at is how much rental properties are price per door or price per unit. If you have a duplex, it's $300,000, price per door is $150,000. If you have a fourplex, it's $400,000, price per unit is $100,000. You need to know in your market, in the areas that you want to buy a rental property, what that price per unit is. Now, I didn't put it in those calculations because understanding price per unit also comes down to understanding the price or median price per square foot for a rental property in your market, okay? When rental properties are appraised, they're appraised both on income approach and sales comparison approach in most cases. Don't quote me on that, I'm not a licensed appraiser, but what you need to understand about this is if you know what price per door is, you know what price per square foot is in the local area, then you can kind of get some context that duplexes are usually between $150,000 and $200,000. A really nice duplex, maybe $225,000. New construction, $250,000, right? You got to understand asset classes, and price per door, right, is going to fall directly in alignment to that. If you're trying to buy single family homes, you need to understand what the debt service on a single family home would be. So meaning if you buy a $300,000 single family residence and you're going to rent it out for $1,300 or $1,400 because that's what the market prevails, but your debt service on that property with 25 or 30% down is $1,300, it doesn't cash flow. Why would it make sense to buy a single family home? So in a lot of markets, it doesn't make sense because it doesn't follow the 1% rule or all this other garbage that you're gonna hear. That's not really garbage, but it's information that is going to directly correlate to, does it make sense to buy that asset class? And I just wanted to share a rule when buying your very first investment property. One thing that somebody shared to me is, it's 2 doors or more or none. That is the quote they shared with me. And what that meant is when you're buying your very first investment property, never, ever, unless you're getting it for like 50% on the dollar, ever buy a rental property that is just 1 door. Unless there's development potential, ADU potential, you're gonna use it for an Airbnb and it's an amazing location or has an ocean view, okay? Why I say this is important is because you want that property to at least break even if one of your tenants moves out. It gives you an insurance policy or a fail-safe in order to protect your cash flow. And if you had to cover just taxes and insurance and you had to do those things, which we'll talk about next, is understanding that 2 doors or more or none is the policy that I really operate off, unless there's special circumstances. Next thing I want you to understand is what the taxes are on that property per year and what insurance is as a landlord on that property. Because when you equate net operating income, you look at the APOD that we just discussed, you gotta understand that I'm buying a property in this area. Price per unit makes sense. Gross rent multiplier makes sense. My mortgage payment after I talk to my lender, or if I pay cash, you still gotta equate, you're paying yourself a mortgage payment if you pay cash. It's just a different way of looking at it, right? The money doesn't just dissipate into free air. You got to understand what you paid for that property and what your break-even point is. So, but taxes and insurance are killers, guys. If you don't understand that and you don't equate that, which a lot of investors will forget about that, they'll get a tax bill. It's like, crap, I didn't make much money because I had a bunch of cap expenditures and other things that came on. So to summarize in this, the numbers, the area rents, understanding to analyze things are just one side of that, buying your first rental property. The other side of that is having somebody help you, not only an investor, but a real estate broker or realtor, agent, whatever you want to talk about, that will give you good guidance. Not just sell you a rental property, guys, but work with you in all of that, answer questions in all of that, and understand the tenant process, eviction process, and then having a great property manager to go along with that. So connections are huge in this process. If I was to buy an investment property, I knew nothing about it, I would find a really good real estate agent that sells and buys a lot of investment properties and probably is an investor themselves, right? Why I'm bringing this up is that so many people I talk to, especially when I sell investment properties, ask me questions about investment properties, and they're not working with an agent. They call me and they say, hey, I'm looking at this as a possible investment. They knew nothing about investment properties. And next thing you know, they're in a position where they're not making cash flow. They're upside down. You're trying to avoid this by having great connections, understanding your numbers, knowing the market, and really looking at the last point, which is understanding the upside of a market, right? The upside of the market is going to be, where are rental properties going in that area? Are things moving in the right direction? Are prices rising? Are rents rising? Okay? And I want you to understand this because right here in this neighborhood that I'm about to drop this for sale sign in, used to be a pretty rough neighborhood. But things are moving along in a nice path. We're seeing more enforcement of parking. We're seeing less headaches and issues. And overall, houses are increasing in value and things are moving in the right direction. And why I want to say that's important is if you don't understand that about the market or the area that you're buying an investment property, you may be going the opposite direction. There's no discrimination, guys. I'm talking about the curb appeal, the pride of ownership, price per home in that area you want to buy a rental property, and making a sure fit equation to all of this. Next and last, Don't buy land as your very first investment. You don't understand development. You don't understand how to move things through the process. And even if you did, you probably weren't buying land as your very first investment. But what I want to share with you is that buying apartment complexes right off the bat and you know nothing or don't have any experience is stupid. Okay? Buying rental properties that you have no clue what you're doing starts with duplexes, triplexes, fourplexes, Airbnbs, right? The things that are easier to digest and creating a better process flow and understanding of how to do this. So if you have any questions, subscribe to my YouTube channel. I have all my contact information below. Give me a call. I don't care. Text me, email me.